It's like there's a premiere. Hype. It's been a while. Yo, what's up, everyone? Okay, gonna turn the music down slowly. Welcome, everyone. It is great to have you here. And that's the wrong webcam, so let me actually quickly change that to this one. Instead of the MacBook webcam, it's the Elgato one, so there we go. Actually not sure if now on stream it's the same. Is it this one? No, it's the good one. There we go. Welcome, everyone. It's been a while, eh? It's been a while. Of course, traveling, but we did a live stream during the travels. And then mainly video content, but here we are. I decided to do a live stream. I did record a video this morning, but I was like, instead of uploading the video, I decided to do a live stream. In the end, I think a live stream is more fun. I had the time. So we're going to be online for about an hour as usual. At least that's what I say. And before it's 2 hours, 3 hours. And I'm going to kick things right off with the analysis. So I just want to start with the analysis, make sure that the people that are here for the analysis got all the information that they are looking for. And then we continue with chatting, Q&A, education, you know, trading, whatever. So, yeah, cheers, everyone. Welcome here. Maybe a Band-Aid from America. Good to have you here. And yeah, we're gonna jump right in. So first world tour, what's up, Sibel, Cheese, Matthias, Patrick from Spain. Greetings to tomorrow as well, Patrick. Appreciate you guys. Hopefully I meet you soon at another event once again. And Cheese, really appreciate the kind message, man. We keep sharing. Keep sharing. So, maybe Band-Aid, Crypto Idea, Christian, Emre, Cheese, Oku, Noob, Gecko, Dimitri, Raghu, Ocontis, RE, Nabil, Cello Farm, RE, Kurt, everyone coming in. But we're just gonna start immediately. We are 6 minutes into the live stream, so it's a good time to kick things off. Okay, so first of all, let's start with the probabilities, and then mainly the first sentence. And the first sentence states that from an Elliott Wave point of view, the probabilities on Bitcoin are at the moment higher that a range and the retracement is not yet finished. Now, in this live stream, I will explain why that is. And I like to start with the bullish scenario. The bullish and the bearish scenario are in no particular order, because you will see that the directional bias, at least on the short term, is actually quite similar between the two, right? And that is what is most important. That's what Elliott Waves can give you. So the bullish scenario is a finished three-wave structure in a WXY. It's a double zigzag. Then you look for bullish continuation to the upside. Now, if you're very bullish and you look for an impulse to the upside, you want to start counting with an impulse. 1, 2, 3, 4, a 5-wave structure. That is the end of your wave 1. You look for wave 2 and then continuation up in a wave 3. That's your most bullish scenario while my shake enters the room. 1 second. Thank you, Bob. I couldn't finish preparing my shake before the live stream. Like the song was finished and my shake was just, it wasn't finished yet. So I was like, oh shit, I gotta, I'll come back in an hour to finish my shake. But then my wife said, I'll finish it for you. So here we are. I just came back from the gym as well. Had a shower. Good. Okay, so we have a wave 1, we need a 2, and then a 3 towards the upside. Now, when we are considering a wave 2, right, there's 2 things that play an important role, which is time, the vertical lines, and price, the horizontal fibs, okay? From a time perspective, the vertical lines, right, are taken with a fib time. It's a fib time tool in Tradingview here, trend-based fib time, right? First click, second click, third click, comparing move 1, right, wave 1 with wave 2 in time. Now, preferably wave 2 ends somewhere between the 382 and the 4, but the 4 is already stretching it quite a bit, right? Commonly, the wave 2 is like 382 to a 2 fib time, let's say, right? Somewhere in like midway, I suppose. But nonetheless, going all the way to a 4, it can happen. It's just, the moment you're gonna pass a 2, 3, 4, etc., probabilities just slowly decrease. Time is never an invalidation nor a confirmation, but time plays an important role. Now we can see that this low here was made after the 0.382, which is good. The problem is that it's very, very shallow. This low did not even touch the 0.236. Now, just based purely on statistics and data, right, which you can find in multiple places, the most common target for your wave 2 in general is the 0.5786, right? Now, the 382 is commonly a minimum target, can also act as support. So the 382, always got to keep that in mind. 104.4K, the 382. And then I have the 0.236 on my chart. 0.236, definitely not a common target. It's a rare, uncommon target for a 2. But in a strong trend, you know, making sure people miss out on deep retracements, it can be a level that's interesting and may hold. But generally, it's not the first expectation. But I do have it on my chart, right? But not even touching the 0.236 with this low is not what we like to see, right? It's very difficult for me as an analyst, Elliott Wave analyst, to give the highest probabilities to this being the end of a wave 2. Doesn't make sense. It's such a shallow retracement, didn't even touch the 236, not even close to the 382, nor to the 0.5786. So therefore, for a wave 2 in a bullish scenario, we actually preferably see a deeper retracement to lower levels moving into the fibs. Right, and then take it from there. Now, something to keep in mind is that the longer this price action here goes sideways without moving into the fibs, the worse it is for this scenario. In other words, the worse it is for the bulls. Because if price is just going to hang around here and does not fall into the fibs in at least a relatively short period of time, I mean, you can see the fib times here. You know, the 4 fib time is Tuesday, the 8th of July, 6 p.m., right? So, okay, cool. It's still a week away. But if we talk, we mentioned the 2 fib time. Second, I have a vertical line on there. So if we open the 2 fib time, the 2 fib time is Wednesday, the 2nd of July, 10 a.m. Interesting. So preferably this wave 2 just doesn't take too long in a bullish scenario. Okay. Then I want to show you this. So I have wave 1 on this high, and there is a reason that I do not want to put it over here. Because it would make life easy, no? If you're like, yeah, but why not just move this wave 1 to the right, count this as a 1, 2, 3, 4, 5 wave structure, whatever 5 is, right? Have a wave 1 here, get a 2. That means that we still have more than enough time as well, because now you take a fib time from the low to the high, and then, you know, you'll lots of time. You can still get a deep retracement, blah, 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 blah. Now, the reason that I do not like to do that is because of the base channel for an impulse. So this is a base channel. If you don't know too much about channeling with Elliott Waves, I have a video on my channel in the Things You Must Know as a Trader playlist. There's one about channels, so I make sure to check it out. But this is a base channel, which is taken from the low over here, which is the start of your wave 1. Start of 1, end of 2, end of 1. Wave 1 is then internally a 5-wave structure, of course. Wave 2 here is a flat. You get a 3, 4, and a 5. Now, what you like to see with the base channel, right, is that wave 3 moves beyond the upper trend line. So we have price moving outside of the channel. Wave 4, of course, comes back to the channel. That's all good, all fine. And then wave 5 moves back towards the upside. Now, what's important here is price broke the lower trend line of the base channel, which significantly lowers the probabilities that whatever is going on here is still part of an impulse in a 1, 2, 3, 4, 5. Because if this would be 1, 2, 3, 4, 5, or 1, 2, 3, and maybe you want to count something else here, is 4, 5, then your wave 4 and 5, they break the lower trend line of the base channel. That's not what you like to see. Lowers the probabilities for an impulse. And therefore, probabilities for me are low to put the end of a wave 1 in a bullish scenario over here. I prefer putting it over there. It works a lot better with the guidelines of channeling in Elliott Waves. And therefore, the time that I have on my chart, the 2 vertical lines and the fibs, is important for your wave 2. Okay. Now then we get to scenarios that continue the range, right? So this is a bigger sideways WXY. First move down, zigzag family structure in a W, X, and then a flat or triangle in a wave Y. I might actually have to remove the triangle, but I wanted to explain the reason why. Maybe you already see it. Let me know in chat if you do. Right? So W, X, Y. Okay. Now wave W zigzag family structure, X is then a flat, right? A, B, C. Now as mentioned just now with the channel, preferably a 5-wave structure finishes at this high, not that one. That's important here because if wave X is a flat structure, A, B, C, B takes out the origin of your wave A. Right, that's exactly what you like to see. Wave C should be an impulse to the upside, which is a 5-wave structure. If that is the end of C and therefore the end of X, your wave Y can actually only really be a flat, not a triangle, because price took out the high here. Now for a triangle, you would have to count this as an A, B, C, D, E. But you can imagine that a triangle like this does not make any sense when you look at how big the W, the X is. Wave Y should be a proper big structure, ratio-wise, time-wise, against the W and the X. And wave A in a triangle has to be a zigzag family structure, right? So a simple zigzag, double zigzag, right? You can't take out the high, the beginning of a zigzag. You can't have a flat in wave A of a triangle, right? So therefore for a triangle, this is a problem, which means that if we think about a bigger WXY, a flat would be the primary, not a triangle. Now the reason why, by the way, in wave Y, we're not looking for a zigzag in an ABC is because wave X retraced very high compared to W, almost touched the 886, increasing probabilities for a sideways WXY, a range sideways structure, not a sharp WXY. Preferably for a sharp WXY, you get a very shallow X. A sharp WXY is a sharp corrective structure. Sideways, right? It's in the name, right? You can call this a double combo as well, and the sharp WXY is a double zigzag, right? But I like to use the sharp and the sideways because it basically tells you what it does, right? So sideways WXY, sideways movement. And in that case, we then preferably get a wave A, B, C. And wave A of a flat can be any structure, but not a triangle. So even if you take out this high, counting a flat ABC here, and then move up, ABC, that's your A, then move up in a zigzag, preferably that's your B, and then a C down, that's fine, right? Even a WXY, that's fine. So this is then the option that basically remains, okay? Which means that in the bullish scenario, looking for a 2, and in this WXY scenario, in both cases, we're still looking for a bit of a retracement, at least. The one might be deeper than the other, but in both cases, we're still looking for a bit of a retracement. Mind you that in both cases, by the way, you do expect continuation at a later stage, continuation up, right? WXY is a corrective structure, and then you go. All right, bullish scenario. Hello? There we go. Wave 1, wave 2, and then you go, right? So the conclusion on a higher time frame, the direction is similar. It's just that you would expect a retracement before that happens. And then we have the sideways WXY with wave X positioned here. Wave X now is a triangle. So this is again a sideways WXY with a triangle in wave X, W, X, and then a flat in Y, but the flat's already ongoing, right? So we have wave A, B, C. So now this move up is not going to be counted as a 5-wave impulse, right? And then of course we took the high. We know that we don't like to count this high as the end of a wave 5 of an impulse for the reasons explained with the diagonal. Now, when we look at a wave B, preferably we count zigzag family structures like a W, X, and then a wave Y, for example, or whatever going on the lower time frames. But we got to be aware of this as well. And a wave C is a sharp move down, 1, 2, 3, 4, 5 wave structure, right? Which then finishes your Y, and then up you go. You would then expect W, X, Y. Right? So you're still looking at a 3-wave corrective structure. I personally do not like, as explained in content in many videos and stuff in the past 2 weeks, I don't like to count this as a 5-wave structure. It looks like a 5-wave swing, right? But this being an impulse, low probabilities as per my content last week. Basically every video I made talks about it. If you want to know the ins and outs, go to the video that took me about 24 minutes to make. So it's the 24-minute video in the recent updates playlist. And that's where I go in depth on this structure. So I prefer looking for the WXYs. Now, for a flat, we then have your A, your B, you need a C down. This is your common target for your wave B, right? It's something I mentioned in the content last week, the fibs, the 1.236 to the 1.38 Fibonacci, 108.5, 109.7. At the 1.38, we also still have a weekly point of control, right? That's resistance. You don't want price to move to the 1.618. If you do, then this scenario, low probabilities. You don't want wave B to move all the way to the 1.618. That would lower the probabilities, right? If it would move to the 1.618, then we got to be aware of looking maybe for something like this instead. So then we go to the other WXY. Okay. The conclusion, however, is still similar. So even though I'm sharing different ideas, the conclusion is the same, right? It's where we're still looking for a retracement. Based on the retracement, we'll know more, because there's a few differences. If we're looking for a wave 2, we of course want a corrective structure. Price here took the high, which means we're either looking for a flat A, B, C, after C, get some 1-2s and eventually move up, right? I would not look for A, B, C and this. I'll probably look for A, B, C, 1, 2, 3, 4, 5, correction, 1, 2, 3, 4, 5, correction, 1, 2, 3, 4, 5, maybe grab the all-time high and then eventually move. And then you get a multi 1-2, which is similar to what you had here. All right? So you go up, down, up, down, up, down, up, and boom, right? That's something that we like to see. The more 1-2s, the bigger the 3. And then you get the 4, 5 still. So that's your wave 2. Here, we also want a corrective move down, right? I mean, this might be your A, but still. Your wave A, your wave B. So this might be quite similar. And then your wave C. Yeah. Wave 2, though, we want to at least touch the fibs. We just want to touch the fibs. And here, we're also looking for price to move down. So from a probability perspective, to me, it looks very unlikely that where price is at the moment, it just keeps pushing. Of course, like there is resistance up here. Having a push to the upside still fits in a scenario here for a B. Push to the upside still fits with a scenario over here as well. Even if you're looking for a wave 2, right, you might still get a bit of a push, but not like bullish continuation. Not like this is the end of your 2, 1, 2, pop up, and just on you go. Doesn't make sense. Probabilities are higher. So if we then look at the probabilities, they're higher that a range retracement is not yet finished. And we're looking for a move to the downside still, right? Unrelated to the local wiggles over here, right? Still looking for a retracement in actually all the scenarios. Even in the bullish scenario, it would be a lot better for price to move into the fibs. Sure, shallow retracements might be part of a very strong bullish market, but not even touching a 236. Yeah, I mean, you can't give that the highest probabilities, right? So bullish scenario, 236 not touched. WXY scenarios, we expect more sideways price action, right? Sideways being in this area here, right? Generally, when you zoom out and you forget about all the stuff I basically said, probabilities here are higher that this is a corrective structure, increasing probabilities to still move up and take out the all-time high at some stage. Personally, I like or I dislike to count this move as a 5-wave down move to the downside, like a 5-wave impulse. Diagonal is not possible here. And an impulse to the downside has overlap, which is a struggle, and counting this as a good wave 4 that ends over here, as per the content last week, is very, very tricky. So I don't really like to count a 5-waver, which increases probabilities. It's corrective, and then you would expect price to continue the bigger trend. And with regards to levels, if we look at some of the support and resistance levels, then you can see that to the upside, I've been talking about it last week as well, but we actually didn't reach it yet. So the 109 to 111K area is resistance. Bit of support to the downside here. As you can see, this is from last week's PVP, weekly point of control, and the ATAS weekly naked point of control. PVP is an indicator, by the way, over here. And if you want the full name, it's called the periodic volume profile, right? And then settings, you can copy them if you wish. I put it on week or month. Those are the only two I'm really interested in. Extended POC to the right. This is the style. Yeah. So that is where I get these from. And ATAS templates are in Discord for the blue lines and the yellow lines and even the purple one down there. So to the upside, area of resistance, just below us, bit of support, daily naked point of control, support, then 101. And if we lose this, then 96.5K. I continuously keep in mind that this low was not formed on any of my horizontals. It's something I keep in mind. And just for the fun and the giggles, once again, this one would fit with the final scenario that I explained. This is the range from 73K to 49K put on top of the current price action. And you can see there is a certain amount of overlap. Now, price doesn't repeat, it can rhyme, but it would fit nicely with the WX and A, B, and then a C, right? This wave C is then that final leg that went to 49K. So yeah, it's just one I keep in mind. But nonetheless, we're looking for retracement. We got to wait and see what the retracement then brings us. What's the volume? How impulsive will it be? Is it corrective or impulsive, right? That stuff we'll figure out. But I'm definitely not quick to judge and jump into longs without seeing any sort of structural support and price again finding its balance and slowly moving up. So summary. Bullish scenario, we want a deeper wave 2 moving into the fibs. Hasn't happened yet. So for a wave 2, we want to see a retracement, low probabilities. That is the end of your wave 2. Base channel, probabilities higher. That is the end of an impulse, not this one here, right? So therefore, this preferably is the end of your wave 1 in the bullish scenario, with all of this being part of a 2 if bullish. And in a more ranging scenario, that's preferably the end of your wave X, and you would look for a flat in a wave Y, or the other WXY, X finish with a triangle, and then you have A, B, whatever B, maybe still another push, maybe we actually reach 109, whatever, it doesn't matter, and then a C to the downside. That's it. So in all these scenarios, we would be looking for a retracement. And, keep in mind, I'm not looking at the 15-minute time frame, right, or the 1 minute. You can zoom in and see a big move, right? On the 15-minute time frame, this looks like a big move. But on the 4-hour, which is what I was at, this, of course, is peanuts, right? That's not what I'm talking about. Low time frame, oh, yeah, sure. You can have moves quick up, quick down, 109K, back to 101 and whatnot, right? 4-hour time frame is the analysis, unrelated to the local, very, very local price action, right? So that is what I wanted to say. I still have 2 volume profiles. I keep them on my chart. Quite interesting. One volume profile from the beginning of the range, the other from the all-time high. They're all the way to where price is now. So they are extended, which is this box over here. Inputs extend right. And you can see acted as resistance, and then the other one acted as resistance. So yeah, they're interesting to keep in mind. I don't really trade of it, but they're interesting nonetheless. So yeah, this is probabilities. Put this up. And yeah, news. Let's look at the news. Tuesday and Thursday this week, we have some news, Central European time zone. So just make sure you trade safe, right? Can increase the volatility on the chart. Might be some spicy price action this week. And yeah, that's that. So, yeah, that's that. Let's look at the chat. I think we started the analysis at 6 minutes. So Elliott Wave analysis at 6 minutes. Now chatting and a Q&A. Yeah, I have something to add to what Dan says. I just want to have a bullish scenario just in case. But then, with regards to the 3, I'm not sure. I'm not sure if you talk about this one. Something that I find interesting in the move up is this. I'm not sure if we talk about the same thing with wave 3 is shorter, but this is interesting to me. You have a move up range, and then another leg up. I don't know. I saw this on the lower time frame, and it it made me think twice. Like, okay, is there a good impulse in here? Then maybe on the 5 min, so you got to go down. Maybe you have a double 4-5, so 4-5-4-5, which means you need a 1-2-1-2, right? And then 3-4-5-4-5 or something like this. But I mean, for me, the directional bias is most important. And in a bullish scenario, as well as in the quote-unquote bearish scenarios, continuation of the range, the directional bias is similar, which is moving towards a retracement still, which is also the thumbnails of the past couple of videos, really. The thumbnails generally explain the highest probabilities. Let me have a quick look up here. Welcome, everyone. Thanks for popping in. See a couple of alts. I'll first answer some questions about the analysis here and then see how much time we have. We still have 30 minutes by the looks of it. From Texas, Kurt, welcome. All the way other side of the world. I saw Argentina coming in as well. Welcome, guys. Nice to catch you live. Nice to have you here, man. Frank the Tank. If we can have an update on the book release. Yeah, so with regards to the book, the lawyer finished the terms and conditions, but in order to completely finish them, I need to have a registered business in France because the business needs to be in the terms and conditions. And that is not yet done. I swear to God, we've been on it for a year almost now. And the administrative shit going on in France to register whatever is incredible. It is so inefficient. This country is so inefficient from a administrative point of view. I've never seen something like this in my life. I used to live in the Netherlands, right? I'm in France now. Netherlands is so easy. It's so easy. France, I mean, it's very complex. And I have an accountant, and the accountant goes through the steps, right? And I deliver whatever I have to deliver. I lost complete track of where we are at the moment with the application. It just takes a long time. And then I need a normal bank account, and that was a problem because of course I work in crypto as well. So everything takes a lot of time, and so yeah. Progress. The book is not yet completely finished. A few things to add, but yeah, I mean, we need to set up the business, man. I'm afraid that's going to take the longest. So, but I mean, it's literally in the final stages. The book, few pages maybe. Check a few pages, and then ready. I want to add something new, preferably written by someone else. So. I want to add something to it, and then it's basically finished and ready to get out there as if the company is online, and then the terms and conditions. Cheers, everyone. Red Web Club, welcome. Good to see you here, Christian. Then the lower degree wave 3 of the wave 1 impulse. If you look at it, wave 3 of the wave 1. 30 minutes. Let me go to the 15. That should work. The lower degree wave 3 of the wave 1 impulse. If you look at the 30-minute or 1 hour time frame of that wave, the subwave 1 and subwave 5 are both longer than a subwave 3. You're talking about this move, I suppose. So in that case, 1, 2, 1, 2, 3, 4, 5, right? 4, 1, 2, 3, 4, 5, no? And then your wave 3. So I'm not sure if this is the right one, but then wave 3 is longer. Inside wave 1 of the impulse, or let me know what if that's the wrong one. Let me know which area you're looking at, then I can have a peek. ICP, yeah, nothing changed. I mean, I mentioned, I don't know if I actually don't know where ICP is at the moment, if it took the low, yes or no. If it didn't, then an expanding wave 1, diagonal wave 1 with a corrective 2 is the bullish scenario. If it did, then looking for another 4, 5, and then the supports were mentioned in the video, the previous video on ICP. Most likely, we're not forming a new low compared to the last low. No, there's definitely an opportunity still to take out that low. I don't want to be too quick to judge. I see a lot of bullish sentiment and a low is made and we continue to the upside and la-di-la-di-la. At the moment, probabilities locally are higher that we're not yet done with a retracement. In like a 1, a 2, and on we go. Probabilities are low. That's the end of a wave 1 in a 1, 2, 3, 4, 5 if bullish. So even in a bullish scenario, preferably you look for a move down. Yes, invalidation is the low. You don't want to see that taken. But you just got to keep an eye on the move to the downside. So if price moves down, or when price moves down, right, probability is higher, we're still seeing a move down. Even if we touch 109, 110, still looking for a retracement, not just low probabilities from an Elliott Wave point of view. But then the move to the downside, the size. If this is going to be a flat in an ABC, then show me a 5-wave structure here. Finish wave C on support, one of the levels that I've shown. Right, we also have a bit of a gap here, so that's also support. And then, give me a bit of bullish market structure locally, right? Maybe a couple of 1-2s, right? So, and that's when, okay, might be a 2, right? Could also still be A, look for a B, and then a C. So the moment price then moves up, and you take out the previous high, got to be aware, oh, this might be a B instead of looking for continuation. So that's important from a trade management point of view, right? But in this scenario, wave Y does not need to take out this low. Wave Y can easily just continue a sideways range without taking out 98K. This one, though, preferably does. WXABC, take out the low of A, is most common in an expanding flat. 3-wave A, right? 3-wave B, 5-wave C. B, moving into the most common pocket for an expanding flat, right? Common target for C, taking out the low of wave A, at least. So in this case, yeah, and what you want to see here is a couple of 1-2s locally. Then you get your 3, your waterfall, right? Deep move down. And eventually you get a couple of 4-5s, touch support, and you turn around. So it depends on the structure. And that's something, of course, we'll follow up on the channel with new updates. As new information comes, I'll be able to share new updates. But we got to be a bit patient on the structure that's forming. So no, you can absolutely take the low, right? There's no reason it cannot happen. And that's also a word I generally don't use, like can't or must or, those type of things. It always can, right? Nothing must in trading. It's always probabilities. And then as new info comes in, we can be more accurate again. Mm-hmm. Shake. Is it possible to count April-May impulse as a double zigzag? That's your bearish scenario for a flat on the higher time frame. So yeah, I know what you mean. I think I have it in one of my folders. Mm-hmm. Or not. Weekly bear. Wow. I showed it in one of my videos, but it's already a while ago. So yeah, you would have your wave A. You need a W, X, and a Y and a B. But then you need a C down. And that's a bit of an issue because a C needs to start with a 5-wave structure. But this being an impulse, it is very ugly, if so. So low probabilities. So if this is a double zigzag, you're looking at a bigger flat, but then you want to start with a 5-wave, and the 5-wave is the issue here. So yeah, W, X, Y. It's a possibility. X is of course very shallow, but X in a double zigzag can be very shallow. So it's definitely not an invalidation, but it is. I don't think it even touched the 0.236, which is noteworthy. But it's the C. It's the C down, right? I prefer to then keep an eye on local price action. You need a 5-wave down, and this as a 5-waver is very ugly. So I don't prefer counting it that way. Your first world travel tour. Hi Koens, I'm interested to join you to learn more deeply about Elliott. Should I do through Patreon? With the links for you. They should both be dollar or euro. I don't know. We're gonna change the membership soon. Anyway, like use a new platform, I suppose, and move some things around. But with regards to Patreon or YouTube, the only thing, I think the currency is the same. It should both be dollars, I believe, because YouTube, I can't change it. It's dollars anyway. And Patreon gives more to the creator than YouTube. YouTube takes a 30% cut. It's the way it is. But that's why we're going to use a different platform soon as well. Because, of course, with more budget that remains for myself and the team, we can build better stuff, and it just comes back. So yeah, YouTube with their 30%, no bueno. Odin, yeah. So I met Odin a few weeks ago, 2 weeks ago, and I showed Odin the Elliott Wave Compendium, the book. So yeah, it was exciting. It exists, and we are very far. Hey, Odin, I mean, like we are very far. It's just tweaking some small things, and what I have to do now is I need to do some administrative stuff in the back, which is urgent. And once that's done, that's when I focus on the memberships next, put those live, the new ones, then focus on the book, get that one sorted and done, then focus on educational stuff coming next year. But that's a big project. So Mario, welcome. Good to see you here. OG's popping in. Gaël Roche, bonjour. French name as well. Good to have you here. Habibi moved to Dubai. If we count the last week's impulse as a C wave, do we assume a running flat? Yes. In that case, we would assume a running flat. That's correct. Is a running flat rare? In a strong uptrend or a strong downtrend, running flats are, I don't want to say most common, but they are more common than usual because of the strong trend. So you always create higher lows. A good example in an uptrend, that is, a good example is here, where flat, right, higher low. Arguably, there might be a flat in here. In that case, higher low, right? A, B, C, higher lows, right? So you're like, oh, well, statistically, according to Elliott Wave, the Elliott Wave principle, let's just use a source, right? So Elliott Wave International, Elliott Wave principle. According to their words, as stated in the book, a expanding flat is most common, then a regular flat, and then a running flat. But they do exist, and its structure comes first. Structure is, to me, most important, and if we can count a 5-waver and the count is a running, then that's something that I'll include in the count. We had something similar here, which is why there's a bit of an overlap between this range 73.49 and what we have now. Is we also had a running flat here, an ABC didn't take the high, and then we moved down, took out the low. This is a C. There's no other way of counting this move up. It's like the perfect impulse, and it's so perfect that it was a C, not an A or a 1. Yeah. Too good to be true. Too good to be true. So it was a C and then price moved down, which is why I am just aware. So what is it with the bars pattern, putting the range at 73.49 on top of current price action. If we then also add the weekly, let me clean this up just a little. Is it this one? No, no, this one. Yes, that one. Yo, I don't know which one it is. Hello. There we go. Oh, that would it would be quite neat, no? But we'll see. We'll see. I mean, there's no reason to think the bearish scenario is the one to play, but a retracement is what we're looking for. Depending on the move down, we'll know what's next. Are we going to take the low? Yes or no? Depends on the move down. Do you create a 2? Do you create a flat in a Y? Price action will tell us, but probabilities are low at the moment that this is a 1 finish 2 and you just continue. Yeah. But in the end, of course, it's all probabilities. If we, so I answered this one. Come on, Livu. 15-minute time frame, there's an impulse to the downside locally. Mm-hmm. Mm-hmm. Okay, 1 low, 2 low, 3 lows. Yeah. 5-minute time frame. I want to see a bit of the detail. 1, 2. Maybe the question is, how many 1-2s do you have? All right, so there's arguably still like this might be a 5. So you have a 1, 2, 1, 2, 1, 2, 3, 4, 5, and then you get 4, 5, 4, 5, and then you finish an impulse, which then, with what you say, would be correct. Then you expect a retracement, and then price to take out that low again. If so, it's a bit low time frame for me. I gotta say, as I got more, like in the beginning when I started with Elliott Waves, I was a 1 minute, 5-minute counter, always going lower, but also for practice. Just price action moves so quick. You always got to keep an eye on the rules, the guidelines. Always check my notes, check the book. Oh, it's changed again. So what's next? And you learn quite quick. Generally, though, I do recommend staying on the 4-hour. But as I moved along with Elliott Waves, I actually started to slowly move into higher time frames and ditch the lower ones. Thanks, Jackson. Yeah, so I mean, the book is definitely it's on its way. It's on its way. We're doing the final pages. I want to add still something special if possible, and then sort the business stuff out, like the administrative stuff. Someone is watching Andy's streams. I actually don't. No, no, I don't watch anything else in crypto. It's just distraction. So yeah, I trust myself most, and like that. And I think as a trader, long term, it's nice to. It might be nice to like look at different people and what they think, but don't let it influence your plan and strategy much. Like, so I notice that, and this is just historic experience, that I do my Elliott Wave analysis, and if I would, back in the day, look at a Discord, and not my Discord, I was in another Discord, or see another video or see something else on a Twitter. Yeah, it's wrong. And then I was like, why did I even look at it? Right? Like, it's just distraction. And I might think, okay, could there be something in here? And I might change my way of thinking and my approach to try and look, could it? And then in the end, it was wrong anyway. So I'm like, yeah, there's no point in me looking at other things. So I'm actually, I do my stuff. I do my analysis. I do my trading. I make my videos. I'm active chatting in the community, which I like to do, but I do not follow any other content creators on YouTube. Don't watch any crypto. Don't look at any Twitter, crypto Twitter, Instagram, any other creator out there, because it's just distraction. Yeah. But in the beginning, when you're learning, it's good because you can compare with multiple people and then probably learn something from everyone in the industry, right? Every analyst will have a little bit of a different approach, and it might be beneficial to follow multiple people and take a little bit from that person and that person and that person and compare that person's plan with that person's plan, and why are there differences, or are they actually the same? And if so, why are they the same? I think that's very good. But once your level increases in, for example, in my case, Elliott Wave analysis, you will notice that you start to trust yourself more, and you're going to look less and less and less at stuff that happens online. Not saying you have to unsubscribe, but very likely if you're going to reach a very high level, then yeah, you probably just do your thing. And you're going to look a lot less at content, which is the stage where, I'm at for a while. What do you think of prop firms? Yeah, they're good. I mean, if you pick the right ones. There's a lot of prop firms out there. There's many that are not very transparent or a little bit shady. So just make sure you take care. I suppose that there's two that I can recommend, which is Breakout, which is a company that I recently got in touch with. And there is actually an announcement coming later with regards to Breakout, because I only want to share something on my channel or support an initiative if I have checked everything in detail and used it a bit as well. And gonna partner with Breakout. They're great. And FTMO is one of the first ones in the industry, and they have a very, very long track record of being a very solid company. I don't really know about, I know about a few others, but just stick with the most well-known ones or the very transparent ones. Stay away from the ones that try to lure you in with the lowest this and the lowest that, lowest price and super easy. There's sometimes it looks too good to be true, I suppose. But keep. I will share an announcement later today with regards to Breakout, and if you want to support the channel, you can always use the code. Who heb je Elliott Wave? Question here from Stephen. How did you make Elliott Waves your own? I bought the book, which is probably Elliott Wave Principle, but you can interpret a lot of things in different ways. How long did it take you till your analysis was right? It took me about 1.5 years to be and feel very good and confident. And that's studying Elliott Waves and trying to implement it every day, right? So it's like studying. So it took me 1.5 years to be confident. I suppose even after 2 years, there's always things I improved. If you would look at my content all the way at the beginning on the channel compared to where I am now, there's such a big skill difference between where I was and where I am. Even though back then it was good, I'm a lot better now as well. So I'm still growing. But that's the detail. Yeah, it's like you go from 100% to the top 5%. It might go relatively quick, and then you go from the 5 to the 1. Okay, that's doable, and then you go into like the little nuggets and the little things and the this and the that, and you get to the 0.01%. Let's say. So it took about 1.5 to 2 years to be confident and be good with Elliott Waves, studying on a daily basis, notebook, practicing on charts, studying all sorts of stuff. And in the beginning, counting Elliott Waves it's implementing Elliott Waves. Yeah, it's tricky. Yeah, it's tricky. It's difficult. There's a lot of rules, a lot of guidelines, probably a lot of scenarios as well, right? And it can be very challenging to keep motivated, to stay motivated. That's what I had. I actually stopped studying Elliott Waves for 2 months because I just didn't get it. And can you believe it? I just did not get it. So in my first year, I stopped for 2 months. The issue with Elliott Waves is that once you start, you can't go back. Because once you start counting on charts, every time you open a chart, you automatically start counting. Your brain cannot stop counting. So I got back into it. But yeah, it's the typical story. Nothing goes in a straight line, even when you're trying to build or make use of a trading plan, which I suppose Elliott Waves is an analysis style. There's ups and downs, and I experienced those as well. So for 2 months, I was not involved. But yeah, take your time. Take your time. A couple of tips that are important, in my opinion, is get a book and a notebook and a pen. And when you start, wait, let me repeat this. Let me open this one here. So a few things that I think are important if you want to learn Elliott Waves. One is get a pen and a notebook and use that notebook only for Elliott Waves, right? Number 2 is check out this Elliott Wave website. It's in the link tree in the description. I open it here for you. This is a great website, right? Like 90% of what's here is really, really good. Some things are not included, but this is it's the best website that I could find, which also shares some of the targets, some of the retracement targets, extension targets, solid photos with wave structures. It's really, really good. And just with your notebook and your pen, go through it, draw the structures, draw the requirements for each structure and the guidelines, and really, really study it. After you did this, make a summary. Now, once you've been through this website, preferably first time you just read all of this, second time you go and make notes, right? After you've done that, you go to the Elliott Wave Full Guide public playlist, which is my playlist here, which covers every Elliott Wave structure in a bit more detail with more information. So this arguably is actually maybe a little bit more advanced, even though it's a beginner's guide, but it has everything you need to know about each structure. So starting with a very, very simplistic way of trading Elliott Waves, video 1, but then we get into all the individual structures, and then we end with different time frames, different probabilities, because something that happens on the weekly, right? The weekly might be bullish. Well, the 4-hour might be bearish, right? So how do you cope with that? That's the final video in the playlist. So then you cover this one here. And this is probably the book that you have, Elliott Wave Principle. And then it's just implementation. Of course, can always join a membership or check out what other creators have. But then it's implementation. So while you're making your notes, look at the chart, try to implement stuff, preferably on a 4-hour time frame. Use many different charts, and just go at it. And then it will come. It will come, but it takes time. It takes time. So don't forget, I also quit for 2 months. At the end of my first year, I got in touch. So if you take a year, January to December, I got in touch with Elliott Waves in February. The year was 2021. And then at the end of the year, I believe it was about September, October, which is when I don't know. I just didn't get it. I just didn't understand it. I didn't get it. I couldn't trade it. I got confused all the time. It was a struggle. And then 2 months later, I got back in it. I solved the problem and life became easier. And then there's a few ups and downs. But 1.5 years in, it really started to click. the last thing I learned was the WXYs. In the beginning, I labeled every correction on the chart ABC. I just didn't know. Why would I use WXY? Why don't I just use ABC? I didn't get it. Yo, Laksha, welcome. Wie geht's? Es geht sehr gut. It's a nice day. It's actually very warm outside, not gonna lie. Yesterday, my family is over here. My parents are here in France as well, and we were hanging out. And oh boy, it was like 34 degrees outside most of the day. Whew, warm. So lots of drinking. No alcohol, water. I don't actually really drink alcohol. But I gotta stay hydrated, eh? Isn't he Dutch? He is Dutch. But I live in France. Laksha, how do you know with conviction when an ABC correction is complete with respect to Kennedy channeling technique? You preferably, of course, preferably wave C stays inside the channel. So when we look at let me start with the structure. So if we talk about the zigzag, right? 1, 2, 3, 4, 5. Okay. We get a wave B and then another. Oh, that's a very low. 1, 2, 3, 4, 5. ABC. 1, 2, 3, 4, and then a 5. You take a channel from the start of wave A to the end of wave B to the end of your wave A. Right, in this example. So if you're looking at a zigzag, or generally corrective structures, but a zigzag specifically, then preferably your wave C is ending somewhere around that lower trend line. I mean, with my drawing, I just eyeballed it, but my wave C just moves slightly below the channel. Yeah, can happen, right? But it would be nice if your wave C ends somewhere around the lower trend line of this particular channel. And of course, vice versa, if you move the structure in the opposite direction, get an ABC to the upside, right? So with regards to the channeling technique, this is for corrective structures, which I didn't explain in the video. So if you, was it here? No, I need the other playlist. Educational content. And then we go down and then we have, here, how to channel. So in the video, I really recommend this one. In the video, how to best use channels. I mainly talk about channels in relation to impulsive structures, not corrective structures. Corrective structures, right? If we think about a WXY, if we think about a flat, if we think about a zigzag, you generally expect price action to be covered mostly in a diagonal or sideways channel structure, right? So even in a flat, in an A, a B, a C, a flat is very much a sideways correction with a break, or how do you call it? Like fake out to the top, fake out to the bottom, and then you get back in, right? A zigzag structure is as per what I write here. Double zigzag, right? ABC, correction, ABC, also generally channels nicely. Same with a triple zigzag, right? In a WXY, sideways, you're looking at a sideways movement, you generally look at a sideways channel. So the channels in corrective structures are more straightforward, I suppose, compared to the impulsive channels, which is why I covered the impulsive ones, because there's more depth to it. Corrective structures, they tend to channel. They tend to remain inside or around the boundaries of the channel. Wave C's in a zigzag can be sometimes a pain in the ass, right? It's about, again, probabilities, because there's enough examples where a wave C just moves way beyond the channel, right? Or C or Y might not even reach the channel. Let me have a quick look here. I mean, this one, it's not bad, but in the WXY, as we counted over here, right? I mean, didn't reach the lower trend line. ABC here, by the way. I mean, look how long C is. So what I tend to say, let me go to the 3rd of January. I always love using this example, Here, this one. And go to a lower time frame. Ooh, there we are. So what you're looking at here is a zigzag. This was the 3rd of January. I never forget this day because I had the most viewers ever on a live stream during this move down. 500-600 people were here, which was insane. But if you pull a channel here, you're like, yeah. I mean, we're looking at you. Initially, you might think, yo, this is an impulse. 1, 2, boom, we just break the channel. You know, preferably zigzag A, B, C. Maybe you go below, but then back in. Nope, well, just down we go. Now, I don't really use channels as you've seen in my content. I don't use a lot of channels when counting corrective structures because what I'm just looking at is if we get to move down here, I am aware that sometimes wave C's can be really strong, right? There's another one over here, by the way. But this one is smaller, but look at the comparison, right? C is quite large. Nonetheless, what I like to look at is wave 4. That's generally what you see me talking about. So if this is an impulse in a 1, 2, 3, 4, 5, we need a 4 and a 5. But preferably wave 4 does not touch the 0.618 from the start to the end of wave 3. So the moment price touches the 0.618, right, got very close here, didn't touch it. The moment you touch the 618, you're like, okay, ABC is the highest probability. Not an impulse, right? And that's the moment where your probabilities switch to taking out the high because this becomes a 3 and the trend is up. And when you get an uptrend, but you get a 3-wave move down, you look for continuation and for price to take out that high. So the moment you touch the 618, right, you're looking for the high to be taken. And as more info comes in, you can try and find an opportunity that is according to your plan, like a potential entry, and then trade it in the direction. The directional bias that you have, which is to the upside because of the 3-wave structure down. And then afterwards, of course, we got this push here. So, yeah. Zigzags, sometimes even with WXY double zigzags where your wave Y might be explosive, but generally just simple zigzags. That wave C can be very impulsive, can be very, very big. Winter, yeah. I mean, winter in South Africa, when we were there a few weeks ago, I mean, you still had blue skies, 15 degrees, not bad, but the wind is cold. It's the wind. Here now, of course, it's, I don't know what today is. Let me have a look. Today is, it is 34 degrees at the moment. And yeah. That's warm, but luckily we got aircon in a couple of rooms here. So yeah, as long as we stay inside, we're not bothered. And actually it's quite nice. Like walking to the gym, it's like a 15-minute walk. I always love that walk. It's nice. I like to walk in the sunshine, and I don't mind the heat, but not for, you know, not too long. You get very sweaty and then everything sticks. Cheers, Alex. Yeah, and it's going to be a printable version as well, right? So the compendium will be downloadable as an ebook as well as a printable version. So yeah, can't deny that. I mean, yeah, we've been working on this project for a long time. I actually really look forward to having the physical version in my book closet. I'll put it next to Elliott Wave Principle. Cheers, Leon. Yeah, I mean, same here. Just get the project done. I gotta say, I'm already thinking about a second book. So once we're working on the first book, and then you're like, okay, well, I have this idea, but I'm not sure if it fits in the context of this book. So maybe we need to make another book at a later stage. So yeah, it's probably not going to be the only book, but hopefully the process of the second book and maybe whatever comes in the future is gonna the process is gonna get better with the experience we had over the last year. And of course there's a delay because I moved countries, which is a bit of a pain in the ass, but yeah, it's exciting. So I already have an idea for a second book, even potentially a third one as well. Yeah. Good question, Dimitri. How did you come up with using ATAS for point of controls and not just using PVP or SVP indicators? So back in the day, I tested many different indicators, softwares, and all sorts of stuff because I wanted to try and find the tools that I can put in my plan. So when I talk about building a plan, there is 6 steps. Right? Step 1 is just try and play around with as many tools as you can. Step 2 is finding some of your favorite tools, build some statistics on them. Step 3 is combine a few of your favorite tools, right? And build statistics on the combination. Step 4 is tweaking that existing combination, maybe add a tool, remove a tool, see what it does with your statistics. Step 5 is working on your trading psychology and start trading with a low amount of money. And then step 6 is slowly scaling your portfolio, getting used to bigger losses. So scale it step by step. And in the first phase where I was playing around with many tools, I used many indicators and checked them out. I read a lot of information online on like technical analysis pages. I even have a notebook still here where I drew all the candlestick patterns, I suppose, right? Like the doji candle and the 3 musketeers and whatever, the hangman and all that stuff. Eventually, I don't use it, but I did study it. And due to that explorative phase, I suppose, like my exploration, I got in touch with exocharts and ATAS. And I used both for a little bit of time to check order flow, right? Like, is order flow something I like to use, or does it just make things too complex for what I like to use? And so I got into exocharts and ATAS, and I started to realize that tools that I really like to use are volume related, right? I like to use time frame horizontals. I like to use volume. I like to use Elliott waves, occasionally channels with regards to Elliott waves, that is, right? And when I look at volume, there's a few things. You have the volume profile, PVP indicator, you have the ATAS point of controls, exochart point of controls, etc., right? But then based on collecting data on some of my favorite tools, I noticed that the levels of ATAS are very nicely respected on the chart. And that's the reason why I use the levels. It's just the respect that the chart gives to the levels. So if I open it, so the blue levels, daily naked point of controls, these are all from ATAS, right? When I go to the high time frame ones, the red ones are not from ATAS. The yellow ones and the purple one here, and even the red one all the way at the bottom. Can I find it down here? No, there's no way. The red one's not. That's too long ago. I don't know exactly how did I get this? Probably a different way. 2020 yearly MPOC. I wasn't even using ATAS back then, so that's bullshit. So mainly the ones here since the most recent low, 15K for sure, right? In the market, all the levels here are ATAS related. So it's just there's no particular reason except for I like to use volume. I started to learn what I like to use based on my experience with many indicators, many tools, and then collecting a bit of data, noticed that they got very nicely respected and kept them on my chart. So that's how the story started with ATAS, and I've been using ATAS for a very long period of time now, actually. Yeah, I really like it. I use it a lot. Every morning when I check the chart, I always boot up ATAS. I literally open the window for 2 minutes. I'm checking if there's a new daily naked point of control. If the week's over or the month's finished, I check if there's a new weekly or monthly naked point of control, and then I close it, and that's that. Right? So I do realize you can also trade from ATAS and of course order flow and all that stuff, but I don't use that in my way of approaching my trading and analysis. Cheers, Josvat Karanja. Welcome. I actually think might be your first message, but glad to hear you enjoy the live stream. I appreciate it, man. Thanks for being here. Pleasure, Laksha. Have you used the indicator called Zigzag? It helps for Elliott waves. In my honesty, there's no indicator on TradingView, in my honest opinion, that is going to out-analyze any human analyzing Elliott waves. If you study Elliott waves for a week, maybe 2 weeks, you should be better than probably any indicator on TradingView. What am I looking at? So this indicator here shows certain swings, but this is not Elliott waves, because else this would be a 2, but you miss out on a 4. If this is a 4 compared to this 2, it's too long. This 3, of course, very extended. So yeah, this is not an Elliott wave indicator. I'm actually not sure what this is. What am I looking at? Wait. Pain labels, lines. Yeah, this I wouldn't recommend this for Elliott waves. It shows swing highs and swing lows, but it's not Elliott wave related. I mean, Elliott waves, of course, you analyze the chart using swing highs and lows for wave 1s, wave 2s, wave Bs, wave Xs. But this is, again, it's not useful really for Elliott waves in my opinion. And the issue with the TradingView indicators is you can choose any Elliott wave. Ooh, we have a TradingView one. Elliott wave. Oh, of course, probably shit anyway. Elliott wave. I mean, look, Luxalgo. He's an amazing indicator creator, right? But it's incredibly difficult to put Elliott waves into a working indicator, and that's why it's always wrong. It's not counting this part, right? It only counts a 5 wave here, but completely leaves out this part. Wave 5 apparently in this case ended at this high. Disregards this. This is not counted. Right? This is not taken into account as well. This was also not taken into account. This is, so you get the point, right? And there's no indicator in TradingView that is going to be better than you. 100%. If you only know the basics of an impulse and a correction, and that's why I recommend to watch this video here, the simplest way to use and trade Elliott waves. If you only watch this video, you will be outperforming any indicator on TradingView. And you don't even need to know the exact details of Elliott waves. Just by watching this, because you don't need to count Elliott waves in order to trade Elliott waves. You just need to know some of the tricks that I personally use in my trading, which will help you to be profitable without knowing the ins and outs and the detail of Elliott waves. So you don't need those indicators, and you'll be outperforming them easy. There's no indicator in TradingView that is going to be better than yourself. If you study for a week, 2 weeks, you're going to outperform anything online here. The only indicator that potentially might be good, but I've never checked it myself, so I can definitely not talk about it, is the Elliott Wave International AI thing that they built. It's the son of Robert Prechter, actually, Elliott, that built it, but I forgot the name. E-Waves. There we go. E-Waves. So I have no experience with E-Waves. You actually check it out sometime. So yeah, I don't know. I would need to look into this, see if it's really accurate and if it's better than my manual analysis. I can imagine that the AI they developed, at least before they put it online, because of course of the reputation, I can imagine it's better than a TradingView indicator, but I'm not sure if it's better than a human. Maybe not at this moment, right? Maybe it takes 10 years. But the comparison now is, for me, is what can your level, your potential against a TradingView indicator, there's no comparison. Your potential is a lot higher. Maybe with AI in the future, if the AIs get up to a certain standard, people might start to use AI analysis more. But you still have to be able to read the analysis and know how to approach it, how to act. So you still need to study Elliott Wave. So you can't really get rid of you can't shortcut Elliott Waves, basically. There's so much information, even if you put it into an AI system, you still need to be able to read it. And very likely, you'll be able to analyze the chart yourself, even without AI, because you need the knowledge anyway in order to read the AI and act on it. But I'm not sure if AI. I haven't checked their thing, so I would need to check. I can't say anything about it at the moment. But I think personal opinion is always going to be very important with Elliott Waves. Can you recommend a software to backtest indicators? 2 to 5 years. Well, a software to backtest. Volume horizontals. I mean, volume horizontals. The PVP indicator only goes back so far, I believe. So it's on a weekly time frame setting, and it only goes back till here, which of course is not enough. Maybe on ATAS, if you increase the... So if, Leon, if you would download my template in Discord for ATAS, for daily naked point of controls and the weekly monthly ones, then once the chart opens, you can zoom out, and basically in the settings, you can select how much time, like how far back in time do you want to go, right? How much data do you want? You might be able to go back a few years, but I'm not sure. Yeah. I did a lot of things manually. Another thing that comes to mind is there once was a platform which was a startup from America, but I'm not sure if they're alive still because I can't really find much about them. The name was Pandemonium, but maybe, I don't know, maybe they changed their name. So was it Pandemonium? Panda, maybe? Pandemonium? I can't find it anymore. I know about the company Pandemonium because they, at the time, sent me an email asking to invest in the company, which for reasons on my side, moving countries and la-di-la, I just wasn't, I wasn't at that moment in time very interested, just focusing on my own stuff. But they had initially a good idea, and what they did is they used AI to backtest a potential strategy. So you put in a prompt, and maybe other AIs nowadays with chat and whatnot can do that as well. But they had an AI which basically you put in a prompt, like MACD and RSI, and if this happens and if this happens, give me the data, and then it would go back in time, check TradingView with the chart that you put in, check when all this stuff happens, and then give you a result. So it saves you a lot of time. But I can't find them anymore, so I don't know. Maybe either they changed names or it didn't work out, or I don't know. Yo, Dewald, how you doing? Welcome, man. What's up? How's life? No, I haven't spoken for a while. My last live stream was a while ago as well. Daywald, everyone, is an Elliott Wave analyst as well. Can I? Hey, wait. Can't I can't click on the names anymore. Oh, I gotta go this. Wait. So what you had now? Go to channel. I was of course traveling and la. So I haven't really been live and too interactive, just making videos. But okay, I see. This is Daywald, also Elliott Wave analyst, Popcorn. Daywald is mainly a live YouTuber, if that's a term. He is usually live streams. And it's always fun to say, like Elliott Wave Daywald back in the day learned more about Elliott Waves in the membership. and then later made his YouTube channel, 6.4K almost. She's doing well. And I'm pretty sure the question that I got asked earlier, you can ask Dewald as well. Elliott Waves is not an easy journey. It takes a long time to learn. The question was how long it took me to be confident with Elliott Waves and not get confused with all the different counts and possibilities. And in my case, I studied myself solo, and it took me about 1.5 years. That was my answer. And then 1.5 years to be good, 2 years to be very confident, and it's a long time, but and I had 2 months of a break because I didn't get it. I use your Atlas templates every day. Can it be that it only works with the paid version? Crypto should still be free, I believe, no? I believe there is talks about it maybe becoming paid, but I think it's still free, or is it not free anymore? Yeah, register and download Atlas for free. Yeah, it is. It is. So you don't need the paid one. Oh, okay, I see. Yeah, I don't know, Leon. You might be right here. You might be right. Yeah. Very limited. Okay, yeah. Yeah, you might be right. I mean, because I open Atlas every day in order to check my levels, I never go back in time because I don't have to. And a few weeks of data is more than enough. I think I don't know. I think I can maybe get like 30, 50 weeks in there. I should check it maybe one time. Like have a look how far back in time I can go. But yeah, 5 years is probably too far. Yeah, day one, it's not easy. People diss Elliott Waves because it's difficult, and for the most don't want to put in the work. Yeah, I agree. I fully agree. It's difficult. But then again, it's very rewarding as well. It's not easy, but it pays off. It just takes a lot of time. Yeah, I completely agree. Okay, everyone, been online for 1.5 hours. So the initial plan was an hour, but it's always difficult for me to stop at 1 hour because I always enjoy chatting and just continuing. So and then eventually here we are. My record is a 6-hour live stream, but that's not for today. So yeah, I'm gonna call it a day. The analysis started earlier in the live stream at about 6 minutes. So make sure to check it out if you just joined and you're looking for the analysis from 6 minutes. Don't know exactly when I stop, but you'll find the analysis there. I'll put the timestamp in the video as well in the live stream. And then possibly tomorrow I just make depending on maybe something interesting still happens today, but don't expect too much changes. So possibly tomorrow I make a video of the analysis. And then maybe we have some updates and new stuff to talk about, maybe not, but then it's easier for people to just watch the short video that I make tomorrow. But at 6 minutes into the live stream, I did the analysis. So yeah, thanks everyone for being here. Thanks for hanging out and joining in today's live stream. The probabilities are very clear from an Elliott Wave point of view as per earlier. At 6 minutes, as mentioned, the probabilities are higher that the range retracement, right, not yet finished, still looking for a bit more downside, and yeah, take it from there so you can check out the analysis. That being said, though, I'd like to thank you for being here, and yeah, we'll catch you again in the next either video or live stream.